One of the top questions that my buyer clients ask is, how much money do I need when I buy a house? This video will give the most common funds a buyer will need. So when a property initially goes under contract, there are specific categories that you will need funds for. First, there's earnest money. This is the initial money that is paid to the title company, telling the seller that you are serious about buying their home. This money is held in escrow. It gets applied to your closing costs when you close. It can go to the seller if you default. The industry standard is 1% of the offered price of the home. So for example, based on a $300,000 home, this would be $3,000. The next category of funds is the option money. The option money is also paid to the title company for the seller. This pays for the amount of days negotiated in the contract for you to complete inspections of the home and the unrestricted right to terminate the contract if you wish. This amount also gets applied to closing costs when you close. If you terminate, the money goes to the seller. The industry standard for option money is about $10 per day. So for example, for a 7-day option period, you may pay $70. When it comes to inspections, understand that all inspections are usually paid by the buyer unless you negotiate it for the seller to pay. The most common inspection is the general inspection. Depending on the features of the home and the condition of the home, you may schedule additional inspections such as a septic inspection, a well inspection, a wood destroying insect inspection for VA loans, roof inspection, HVAC, etc., just depending on what you want to find out as you are doing your due diligence. A general inspection usually runs between $300 to $500. Now, those are the funds you will need when the property initially goes under contract. Now we're going to go into the funds of during the contract process. So one of the fees is the appraisal fee. All loans require an appraisal. This determines the value of the home. The cost of this starts around $600, but maybe more depending on different factors. Another cost that you will need funds for may be for a new survey. All loans require a survey. A survey outlines the boundaries of a property. If a new survey is required and it is negotiated for you to pay for it, the fee for that can be around $400 and up, depending on the size of the lot. Now you are ready to close. Your funds when you close include your down payment, which can be 0% if you're using your VA benefit or a USDA loan, or 3% and up depending on the loan you are using. The rest of your closing costs include title fees, lender fees, collections of taxes for your escrow account, which is about 3 months of taxes, collection of insurance payments, which is also usually about 3 to 6 months, depending on the lender, your HOA proration, and your loan interest rate collection, which is from the day of closing to your first mortgage payment. Usually closing costs are about 3% of the price of the home. Remember, the earnest money is applied to the closing costs. Buying a property is an assessment and long-term investment. As always, depending on what is happening to the market, you may be able to get money through down payment assistance programs and or getting concessions from the seller may be negotiated. Thank you for watching this video. To get notifications for future videos from our team, press the subscribe button below. And if you have any questions about buying or selling a house or property management services, please do not hesitate to reach out to us with the info below. Thank you. Until the next video.